Hearty good morning, ladies and gentlemen, and a warm welcome to all of you to the 5th edition of the Global FinTech Fest. My name is Kavya R. Chavali, and it's an honor to gather with such a distinguished global audience, as we all know that this event is a testament to our collective commitment to building a financial future that is inclusive, responsible, and resilient. Before we get started, once again, I'm going to request all our members of the
Good boys or
Yeah. We'll see. We'll start with you, Shailendra. Can you please demystify what, according to Peak 15 or according to you, is the word fintech, and how do you classify this industry in the way you'll see it?
Kunal, thanks. Hi, everyone. I'm Shailendra Singh. I'm a partner at Peak 15. I started at the firm, earlier called Sequoia India. I started at the firm in Jan 2006, so it's now 18 plus years of doing this. I've known both these gentlemen on my right and left for over a decade, and I'm very privileged to be shareholder in both companies, just sharing a bit of context. Kunal, that's a very loaded question. So thank you, everyone. Privileged to be here. Very loaded question. How do we think of fintech? Look, there's two big founders sitting on my either side, and the head of our very esteemed regulatory of NPCI. So I feel we should ask this question of other people. I'll just give my quick context of how I think about it as an investor. I think fintechs try to offer 4 key propositions, and all companies fall in somewhere in this bucket. And at least that's how we think of it. We think of flow-based businesses, which are payments businesses, which provide the proposition of moving money or the transfer of value. We think of stock-based businesses, which have balance sheets. They may involve lending, NBFCs, banks, and so on. We think of software-based businesses, which provide infrastructure for everything else to happen. And we think of workflows as a key enabler. So workflows might be enabled by software. Workflows may involve the flow of money, or workflows may involve the creation of a balance sheet, etc. But all the propositions eventually boil down to these 4 areas. And we constantly look for new ways that companies can address the needs of their target customer. It could be consumers or merchants that will try to build around these 4 vectors. And India is a very special country because of all the innovation that happened with NPCI. If you haven't seen Amrish's tweet from this morning, I think it's become the viral tweet of the day. So I think India is a very unique country where our regulators sort of provide a pretty insane product roadmap themselves with everything that's possible in India. And then I think the fintech ecosystem or the startup ecosystem can build on top of that. So that's my quick thoughts, Kunal.
Perfect. Amrish, I'm going to come to you last. I'm going to ask Dilip this question. Dilip, you've been now in NPCI for 15 plus years. You've seen this ecosystem develop right literally on the front row. And I'm curious to get your perspective that, like, we are at 2024, 10 years from now, what all possibilities we can imagine in a metaphorical way. You had spoken to me about tokens. You have spoken to me about how we can do many things significantly more efficiently than they are done today. But can you just give a vision? And it doesn't have to be all from NPCI. Like if you say India FinTech, we are in Global FinTech Festival 10 years from now, what all is possible?
So 10 years is fairly long, but I think that, when you look at the current, and thanks to RBI has been working very hard to see how do we increase the speed of money, right? And I believe the similar principle what happened with money will happen with the other assets. That's given, right? Now the question is, whether tokenization is the way out or there is some other technology, I don't know at this stage. But I believe as of now that looking at the way things are happening in the Western world, it might take that route, and the time, effort, and the cost would actually dramatically change to move the other assets like money in due course. RBI has started the CBDC pilot. That's the first tokenization effort of money. And I believe that, unlike the Western world, where crypto powers the decentralized finance, India has an opportunity to create a CBDC-powered decentralized finance system.
And just to double click on that, what does that mean? Do you think that we could potentially tokenize land records, fixed deposits, like or do smart contracts?
Yeah. I think when I said that everything can be movable and everything can be digitized, it can be everything, virtually everything.
It's very powerful. Amrish, I'm going to refer to your tweet for a second. You talked about the thing that NPCI's innovation roadmap, but can you talk about the impact? Pine Labs has been working on payments for a very long period of time and has done not just innovation in terminals, but Pine Labs is like maybe 20 other businesses within the same thing. Can you talk about what is the impact of these roadmaps on the business, and how do you see the entire merchant ecosystem completely change because of that?
I think that tweet, when I had sent it out, I'm obviously sending it out just praising what NPC has done for the country. I mean, just look at what's happening.
I hope everybody understood it.
If you look at what's happening just outside of where we are and getting out here, took me an hour and a half from Bandra West to come here. At the same time, when my mum wanted to get her car be ready for FASTag, I actually was out of the country and I could finish that transaction less than 1 minute. And that was really on the backs on the DPI infrastructure, what NPCI has set up, what the BBPS environment has created. We at the end of the day have the responsibility to build on top of that. Nowhere around the world does a not-for-profit body or a government institution create the highways so that you can run businesses on top of that. In most cases, a founder has to go ahead and build the highway and then run the car out here. We've been given a gift in our country where the highways have been created for digital payments, and we as founders really need to run businesses on top of that. Look, I'm actually very proud to see the recent result which PhonePe talked about. And PhonePe talked about an astounding result where this was a company which has only been focused on DPI, build businesses around DPI, and have been able to create a business of scale and size. Honestly, we at Pine Labs, we take that approach into everything that we do. We want to follow the trend, follow the consumer, and follow the merchant. And if we can build value-added services using the existing infrastructure which has been created, I think we'll come out good. So that's the approach which we are building it. So Dilip, all praise to what you guys have been doing.
Dilip, just to be supportive of him, we are all fans of everything that NPCI does. It just keeps us busy all the time. And we are, I tell my team that our 2 years roadmap is defined by Dilip. They can talk to me for the year 3. Shalin, I'm going to come back to you. You've been investing in India for 18, 19 years now. Can you just give us a perspective of what have you seen change? And can you also give us from your vantage point, a decade from now, what does India look like? And it's very hard for a lot of founders who are building to just have this macroeconomic perspective of what you have managed to see from the front row and also kind of imagine for going forward?
Yeah, first, thank you, Kunal. Look, folks, it's been a total privilege to get a chance to partner with, hundreds of companies in India over these last 18, 19 years. My favorite anecdote is the year I started investing in India, India's GDP was 850 billion. This year, it's going to be 4 trillion. This is GDP, all of India's GDP, 4 trillion. And we are not yet on 2 decades, just shy of 2 decades, almost 4.5 times, 5 times. Digital advertising in India that year was 39 million M. All of India's digital advertising. iPhone wasn't yet launched. I led a small seed investment in Pine Labs in early 2009. I joke with Amrish all the time that my daughter, who's now 170 centimeters tall, was not born then. She's now taller than my wife is. So, basically, our big learning is while things can look a little bit slow, frustrating, sometimes it can be challenging to build a business. A founder's journey is incredibly hard. It is like the toughest job in the world. My favorite phrase to founders is, you chose the toughest path possible in life. So deal with the pain. Sadly, that's part of the territory, and then you got to keep building. But when you take a very long-term, multi-decade view, most people are surprised how big companies can become. I remember in one of our early investment committees on Pine Labs, somebody in the investment committee had said, it would be amazing if the company can get to 10 million in revenues. Okay. only later on to figure out many years later that it would be orders of magnitude bigger than that, right? So I think what happens is when you wear the lens of today, it's hard to imagine what might happen in the future. I think something similar is likely going to happen in India in the next 10 to 20 years. It's very hard to fathom today how big companies can become, but I can give you a very simple mental exercise, very super simple. Let's assume that both these companies here on my right and left can grow 20% a year for 15 years. That's not a lot, 20%, both are growing faster. 20% a year for 15 years is 15 times. 20% a year for 20 years is roughly 38 times. So let's say 15 to 20 years, you could compound that. Each of these businesses would basically be north of $5 billion in revenues in 15 years, approximately order of magnitude. And a $5 billion revenue company today is hard to imagine, in India. But I think just like we have seen in the last, like I said, 18 years of my time here, I think we're going to be pretty positively surprised. And what Amrish just said about India having the digital public infrastructure and the rails is pretty dramatic. We now invest all over the world, in many parts of the world. We don't see this level of high caliber API infrastructure to do identity or moving money or so many other things like account aggregator and whatnot. I think all the people here are better equipped to talk about them. But these are very profound innovations, and these are only going to make sure that 20% a year can be much faster and likely can keep going for a lot longer. So that's my quick view, Kunal. Sorry for the long one.
But Chandra, I remember I was briefly in Sequoia for 2017, and we had talked about one interesting thing, that there are literally no company with $100 million of revenue.
Yeah.
What do you think is the scale of Indian tech ecosystem? How many companies would be $100 million revenue or $200 million revenue plus in India now?
Yeah, so in 2017, we had only 3-4 in our portfolio that had crossed triple-digit million revenues. I think we are at 45 now. I can only talk about, I think we have better information in our own portfolio. But more importantly, I think about 24 companies have over $250 million of revenue. Now remember, the kinds of companies we back are tech-enabled, so they grow much faster than market. But we are beginning to see really scale companies get built in our region, and then especially here in India. They're not big by India standards anymore. Earlier, our big company was still small by global standards. I think we're now beginning to have companies that are relevant, and the quality of product and innovation is relevant globally. Kunal, you and I keep talking about the fact that a cred-like product doesn't exist in other markets yet. Yep. Amrish, we keep talking about the fact that so many of our products and services are relevant to other markets. And when Pine Labs tries selling in many other countries, they are seen as a product leader, bringing innovation. I think NPCI is now exporting, its software stack to many other countries. And I think it's a matter of great pride that we have this position of product leadership, product relevance, and scale relevance relative to global markets.
Perfect. How many of you over here are founders? Please raise your hand. Okay, quite a few of you. And how many of you are in businesses that has to do with credit? Please raise your hand. Okay, that's quite a lot. Amrish, question for you. Can you give your views on credit and fintech? What do you like and what do you dislike?
Look, I think, I mean, one very interesting way to look at that whole opportunity is if you look at what's happening with Nubank, Monzo, and then also with Revolut, right? What each of these organizations have done is started off as fintech, build very strong tech services which can disrupt pockets of the fintech space. And obviously, one of the largest revenue pools comes around credit. I really think that that's the formula to build a company which can scale and become huge. One of the other underlying factors which is very interesting in each of the markets that they are operating is the regulator and the government have embraced the concept around digital banks and have actually accepted digital banks quite early. Reserve Bank of India is right now evaluating that space, but as and when that space gets opened up for digital banks to start coming into India, there's going to be a natural progression for Indian fintechs to go into banking-like services and then go into credit-like plays. And then I think the opportunity is just going to be humongous for all founders building in that area. I really expect that over the next few years, there's going to be a new class of banks and financial institutions coming out of India, which will be fintech first. And that's going to open up completely new sets of opportunities for all of us.
Perfect. Dilip, can you talk about the next 5 years of UPI? We have already gotten to 15 billion transactions a month, but we still have a lot of Indians that have still to come onto UPI. We still have credit to take off on UPI as well. And we have all these new services that are getting different cohorts, like kids coming in and other things kind of coming in. So how do you envision UPI 5 years from now that we have kind of gotten to this scale? It probably does more transactions than most networks in the world already. How do we see this from here to next 5 years?
So while lot has been done, lot more has to be done, needs to be done, right? That's the way NPCI at least looks at it. And I've spoken about it before as well. We are looking at 100 billion is a possible number that India should look at, right? And I don't know, it takes 10 years, 15 years, but 100 billion is a number. It's a potential for India. And I've done this math before as well, right? The 3x increase in the merchant side, 3x increase in the consumer side today gives a 9x multiplied effect, right? If you look at the velocity and other aspects. So I think it's a fairly achievable number, but a lot more required to be done on that. The credit is absolutely going to be the backbone of this growth. We have launched now Credit Line. Just a couple of weeks back, we released the commercials. And I think the small ticket credit, high frequency credit is going to be really important for us to reach to that particular goal. The second is, I think we are fairly convinced that this recurring payments, the mandate QRs, the EMI QRs, those are the stories which will drive that usage, because today it's fairly tedious and physical process to adopt anything on the outlets, organized retail, unorganized retail. And I think that is the area where companies like Pine Labs have a huge scope to drive a software-driven innovation instead of looking at a fixed infrastructure and those kind of things. I think we keep talking about it a lot, and I hope Pine Labs will drive more than physical to a software-driven approach where it can be contextual, where it can be demand-driven, where it can be real-time, right? I think that's the way I look at it. The third thing, what I look at it is, obviously, while we talk about, today we do about 1 billion consumer-driven transactions, right? And which is 500 million financial, 500 million non-financial. And it keeps running in RBI discussion as well, that how do we actually scale up the capability to process this large amount of transactions. So I think there has to be more efficient way to deal with that. We have done something called offline transactions and those kind of things. So I think, but we still have to really get it to the scale to drive, truly decentralized, distributed way. The transactions are happening, and we only get to know in a near real-time basis instead of real-time basis. So I think now there has to be a journey from a real time to near real time, in my assessment, because otherwise the scale what we are staring at, it unimaginable.
Perfect. Shailendra, you talked about earlier when we were chatting about what is the difference between tech, fin, and fintech. Can you just double click on that, and
Yeah.
what did you mean by that?
Yeah, so folks, many of you are fintech founders. Look, in our view, fintech is a precision business. Okay, it is not a speed business that you try to blitz scale. So, and in our opinion, what happens is when financial services or fin meets tech, a lot of tech founders build these fintech companies. They try to build them the way of tech, which is grow very fast and raise a lot of money and so on. But actually, those are not the principles of financial services. The principles of financial services are much more precision centered. And so our view is, fintech should be built with a multi-decade horizon. Fintechs are not normally winner take all. All regulators want multiple market participants. They want a healthy, competing set, and they want consumers or merchant stakeholders to be served well by competition. So these businesses have to be built thoughtfully, in our view, Kunal, and not be try to build with blitz scaling or tech type DNA, but with a balanced DNA. Like I said, we always look for precision in fintech. Sharp proposition. If it's underwriting, very sharp underwriting, disciplined execution, and so on. And we don't look for speed and velocity and that type of mindset in the founders we try to back. So I hope that's helpful.
Makes sense. Amrish, you've seen credit, at least when it comes to merchants, products, services, kind of take off right in front of you, and you see there's kind of multiple participants from banks to now NBFCs and fintechs participating in that. In the ecosystem perspective, like where do you see the largest opportunities still not captured, and when it comes to, let's say, merchants and consumer worlds are still not fully integrated in some ways? So what are the pending opportunities that you see that are still big to be captured?
See, I think, again, if you actually look back into history and see how credit has grown, there are two main, maybe three factors which have the maximum impact on credit. One, speed of credit delivery. Second is cost of credit delivery. And third is the trust in credit delivery. So if you don't know enough about the consumer, and if you can't lend to the consumer, there's a problem. If it's taking you too much time and cost to get the money back, credit will not flow. And the similar thing is that if disbursal takes time. Look, it took HDFC Bank 25 years to build a book of the size and scale that they have built. It has taken about 12 to 15 years for Bajaj Finance to build a business of that kind. I think a fintech which can deliver to all of these three areas, which is deliver credit quickly, collections is becoming seamless, and at the same time has a very high trust score when it comes to delivery of credit, I think we would have solved for all of these things. And we are getting to see that in businesses, for example, yours also, where, credit is being delivered at a very low cost, but at the same time, it's a high quality credit. So first of all, I think we are started on that journey. I still believe that Indian consumer hasn't really adopted to credit and hasn't adopted to credit to help personal growth, personal growth, consumption growth, and economic growth. As we start to see Indian consumer use credit to better their own lives and the ecosystem around them, I think the Indian economy will benefit. It's a classic question around capitalism and socialism, which says, if the consumption cycle increases, we as a company are going to go and we as a country are going to go and do well. I don't think so that has taken off enough right now. I think there's a lot more to be done to deliver credit to drive consumption in our economy today.
Dilip,
I think I think that has to be done with great deal of moderation. Whenever people are too bullish on credit growth, credit growth is, should, like, there is a very strong balancing force of doing it super responsibly, doing it very carefully, and so on and so forth. I think, like, at least I feel worried. People take credit in some countries, not in India. We have seen recently people take credit and then do real money gaming online. That's pretty scary. People are using credit to do futures and options online. That's pretty scary. And then you don't want people falling into a consumption trap. Like in certain parts of the world, credit has reached the point where it is used, but it is also abused. So I think, look, in India, the good news is the economy has had a healthy savings rate for the most part. People have been, fiscal prudence is very cultural to us. And I hope it doesn't get into a zone of overconsumption or a zone where, lots of people and households and so on. So I would just say that, yeah.
So I just want to add one point there. I think, and I fully agree with the views that it has to be a responsible way to drive the penetration, because it's a very risky business. But I think the biggest hurdle in my assessment is the collections, right? How do you really get these collections done? And with this UPI auto pay, right? The credit line on UPI, it's like a fully end-to-end life cycle product, right? Once you allot a credit and once the fellow is connected back to you, it's real time and connected, right? So the banks have the ability to do the step up, right, based on the repayment facilities, derive the newer business models like credit as a service, charge a small fee to give that credit line back to the customer. So I think this is the only way, in my assessment, it'll go to the hundreds of millions of the Indians, right? The traditional way of underwriting, giving money back to the consumer, collecting, is not going to work, right? So there has to be the way payments have transformed. I think the credit has to transform all by itself, right? Using the DPIs. Unless that happens, I don't see it's going to scale up dramatically.
I think, Dilip, what you're saying is true, that anything that is done inefficiently, as a country, we cannot afford it, because the cost of doing business dramatically goes up, and we need to be operating at literally in pesos to do a lot of the things that are done in probably dollars right now, right? So I agree with that. But I think Shailendra's point is an important one to kind of talk about. We have 100 million customers plus who are getting exposed to credit for the first time, technically, probably in their family. And I think the need to get successful fast, get rich fast, are balancing forces that we always need, because what we don't want is that this hyper efficient system delivers a hyper efficient result, and we are kind of because what we don't know how the human behavior works, we are just making the systems dramatically more efficient, right? So that's
but today also, I'm saying, if you look at credit cards, right, there are cash out which happens, right, and it will happen. But I'm just saying that what segment and how much value is into that. I'm just saying, till the time, in my own assessment, I'm not an expert in this area, but 5 to 10% will happen, right? Such a large country,
Yeah.
it'll happen. But I think the remaining 90%, we know exactly where the funds are going on. It's valid P2M categories. The spends are happening. It's a healthy picture.